Good evening, friends. This is time for the trade plan for 1st of March 2021. Now, on Friday, we had a fairly strong down session. Now, the easy analysis after a 700-point decline is that we will go down and go down further and, you know, expecting Armageddon. But I think there is some different perspective which should be taken in the extreme short run. That perspective is that yes, bond yields are up and markets globally have reacted very, very strongly to that. But are bond yields so high that all money will get withdrawn from EMs immediately and will start to go back? I don't think that sort of view is a practical view. A. B. If you see the US 10-year, as we closed on Friday, it actually has cooled off. And if this starts to cool off further, then chances are that we have an equally sharp bounce back. Global futures, Japan, Hong Kong futures, which trade into the US close, they have kind of, uh, you know, uh, recovered from the lows. So let's see if we can get Nikkei futures. Okay, so this is daily, and again, you haven't had fresh lows post this sort of low that we saw on Thursday. So from these Thursday levels, these futures have closed a bit higher. So, having said all of this, we had a slam dunk on Nifty on Friday. 700 points is a lot. Plus, what you had on the Bank Nifty from the highs, it is now down 2,500 points. You guys would all recall that there was a day when Bank Nifty went up, I think, 2,300 points on this bar in the budget day. So a lot of that has been given back. While, yes, technically it looks like support is broken and, all kinds of mayhem is expected. I would like to look at Asia rather than have this one-sided type view. If Asia does not do too badly, and given the way bond yields have fallen, see, right now markets have single point agenda, bond yield, and the markets are anchored to that one number. If bond yields start to come off further, I would think you could have a serious upside pullback also, because the decline has been so hard. Now, the other factor I have here is the monthly pivot based on February data, that is at 14,540, and we have closed in this zone. So this is the sort of zone from where some sort of support could come in. On the monthly Bank Nifty pivot, you are at about 34,472, which is very close to the weekly low, which we had at about 34,650. So in my view, and this is my view based on what sort of factors are governing the market, I think Monday it is possible that Asian markets do much better than Friday, and that leads to a overall global move on the upside. Because yes, bond yields have risen, but they haven't risen to the level where the taper tantrums may come in. Now, obviously, this is a view, and if we start to break Friday's lows consistently, then that view goes out of the picture. But for the moment, I would think that on Friday we did a lot, and maybe you should find support at current levels, and post that, you know, based on the news flow, etc. Further downside may or may not come in. So what I have done on Friday is that I have certain call positions in the hope that there is at least a pullback of on the factors which have led to this sort of a collapse. And if US futures pick up, etc., and if semblance of stability comes in, the market could have a serious looking pullback, possibly towards 14,800 on the bank nifty, maybe 35,300, etc. And that is the view I am taking for Monday. Maybe there is a further decline if bond yields again start to climb up. But I think just for the immediate term, the risk reward is probably on the upside. The FI selling, I think, adjusted for MSCI flows, has been about uh, you know 13,000 crores. That is about as bad as a day can get. Even they would like the market to stop falling if they have to sell further. So somewhere, if everybody is on the sell side, two things can happen. Either you collapse all the way down and you get 13,600 on Monday, or you know people who want to distribute their stock would like the market to stand here for a bit, have some sort of pullback rallies, and then look for a further downside. But I think in a couple of days, a lot of mayhem has happened. So maybe we'll get some, uh, you know, green bars before we have a further fall. All kinds of, blue chips, the private banks, etc., down 5-6% on a single day. Yes, it's a correction, etc., and these stocks have run up. But I think just based on the bond yield, somewhere things have been overdone, and from here we could have some upside before the next decline starts. This may not be a popular view, but I think this is the kind of view that often does well in a one-sided market. So that should be it. Take care, trade well, and please consult your financial advisor.